Alright guys, late night video and let's talk about supply chains today, specifically the resource war between China and the West. Now there's a big reason why Trump's tariffs are going to fail. It's not because the US consumer market isn't big enough, everyone knows that it's the biggest in the world. It's because Washington didn't get their supply chains ready. The US might be a huge economy, but it's consumerist power, not production power. China, on the other hand, is closing ranks with BRICS and they are planning the next checkmate move. Now, the US might be waging a tariff war, but China is fighting a resource war. Now, Chinese tycoons are turning Indonesia, which is part of BRICS, into an aluminum giant. Rich Chinese businessmen are pouring in billions into projects to develop the entire industry. Now, they did it before for nickel, and now the game plan is to corner the global aluminum market. And if Trump really understands the gravity of this, it's really time to sweat. Now, aluminum is one of the most crucial materials when it comes to high tech manufacturing. And if you want to build electric cars or to build semiconductors, you need an abundance of aluminum. Now, to make a Tesla EV, around 15 to 20% of the entire car weight comes from the metal. And now that China plans to corner the market, they should ring the alarm bells for US industries. Now, firstly, almost 50% of US aluminum is imported, and of those brought in, the majority comes from Canada, the EU, and even from China, over $12 billion worth at the very least. But here's the problem, all aluminum exporters are facing 50% tariffs trying to sell their production to the US. So now the cost of US supply is going to rise substantially, and this means higher price tags for domestic US consumers, plus the inability to export cars and chips overseas. And if you're sitting in Washington, you have the entire strategy backwards. You need to build up your supply chains first before you can impose a tariff war on the world. But what China is doing now is going to remove critical supply in the world for the US, especially in aluminum. And with more supply means lower costs for Chinese manufacturers and the ability to starve US industries out. And it's not just the mines. Chinese companies are going into the smelting and refining business. Just like in rare earths, this is where the value added lies and how capital intensive industries are best built in the BRICS countries. Now, Tsingshan, which is a steel giant, is moving to build more aluminum smelters within Indonesia, and by 2030, the country will have at least 6 smelters which will have heavy Chinese influence. And this sets up a really interesting situation. BRICS is going to be a self-sufficient trading bloc where commodities will flow within members. And if the US needs to import metals, they will need to deal with BRICS and by extension China. Now, I really want us to understand how cornering all these supply chains actually helps Beijing. It's a long-term game that even today the Chinese, they are still playing it. They are interested in building physical reality, while Trump is busy trying to manipulate interest rates and sending out letters of ultimatum. Now, the latest Chinese export numbers just came out and it vindicates everything we've been saying. The first 6 months of the year ended with a record trade surplus of nearly $590 billion. And this might come as a shock to many, especially the big wigs sitting in Capitol Hill. Weren't Chinese exports to the US supposed to fall? Well, it did fall by 16% in June, but what China sold to the world more than makes up for the shortfall of sales to the US. It's really crazy and it proves that Trump's tariff war is not just making China great again, it's keeping China great for a long time to come. In fact, we need to take a closer look at the trend of Chinese exports. It gives us a clue on how sanctions and trade actions are backfiring in real time. Now, after the pandemic, Chinese exports started to fly up, but it was the Ukraine war that really cemented China's position as the premier destination of affordable goods. Now, the cheap Russian oil and gas gave the Chinese economy a very big advantage versus Europe when they were paying through the nose. Now, Trump is helping to do the exact same thing with his tariffs. Countries around the world are buying everything from China to lower their cost of production. It's the only route left to sell into the US consumer market. And let's take Europe for example. Trump is proposing a 30% tariff on all EU goods, And that is enough to collapse everything. And remember that energy costs in the EU are still disgustingly high, plus there's a shortage of skilled labor. And knowing this, we can immediately extrapolate what's coming down the pipeline in the next few months, maybe even for the next few years. Now, Europe today exports a ton of vehicles and car parts to the US, almost $68 billion worth. Now, you slap on a 30% tariff on those, these exports could literally fall to earth. The EU will be forced to buy cheap inputs to make more affordable car parts to counteract Trump's tariffs. And where will they find the steel and aluminum from? As we covered earlier, it will have to come from bricks, and buying from bricks probably means getting your supply from a Chinese factory. It's really hilarious, but the tariff war is helping the bloc grow as a new center of power. And let's talk a bit about the chip war because US tech giants finally realize they still need the Chinese market. Washington wants to play politics, but companies like Nvidia, they are fighting for survival. It's such a 180 that Jensen is flipping apart the US narrative that China is going to use Nvidia's chips to run their military. And he's completely right. China doesn't need it. Beijing can use their own Huawei based chips to guide their missiles, to power their air force, and to assist their vessels. They don't need Nvidia chips. And after looking at the sanctions on Russia, the last thing the Chinese want is additional dependency on US tech. Now, what Jensen is terrified of is losing the biggest market for semiconductor sales. And if this happens, especially when a tariff war is wrapping up, there will be no recourse anymore. And according to Nvidia, China's AI chip market could reach $50 billion in just a few years' time. And that's why we have Jensen trying to pretzel his way into the Chinese chip market.
But what if, in doing that, you also are providing the Chinese military with Chinese intelligence with the capacity to supercharge, to turbocharge their weapons with the very best American chips, which are yours?
We don't have to worry about that because the Chinese military, no different than the American military, will not seek each other's technology out to be built on top of it. They simply can't rely on it. It could be, of course, limited at any time. Not to mention, there's plenty of computing capacity in China already. If you just think about the number of supercomputers that are in China, built by amazing Chinese engineers that are already in operation, they don't need Nvidia's chips, certainly, or American tech stacks in order to build their military.
It's really important to understand this shift because either way, Beijing is going to win, and there's no way to stop global tech progress. Chinese developers will get their AI chips one way or another. Now, Jensen is on his way to visit Chinese officials in Beijing this week, and want to bet he will be wearing a suit and a tie to the meeting. He doesn't want to screw this one up. And to be fair, this is a risk. US senators are warning him to be careful on the trip and not to visit certain companies on a blacklist. But for Jensen, there's only one objective here. He needs to start selling high-tech chips into the country to stall Huawei. And it's all about the path of least resistance. Now, China is a hyper-competitive market, so the hope is to quickly allow internal competitive spirit to short-circuit Chinese progress. And there are so many exciting things coming up in China's chip ecosystem. Now, we have Huawei looking to redesign their AI chip, more funding coming from Beijing to supercharge R&D. But I want to focus on this piece of news. China is opening a new semiconductor school led by a Stanford-educated expert. Now, this might sound very innocuous, but understand the true meaning behind this. Beijing is preparing for a very long chip war that could span years and span decades. They are not just transplanting and hiring experts from overseas, they are looking to grow their own talent pipeline to compete against the US. And that's why Jensen is in panic mode. He sees this. He kind of understands that the tsunami of affordable chips are coming from China that's about to hit the global economy. But let's end today with gold and how this bull market still isn't over just yet. Now, yes, gold has climbed well over 25% this year, so if you're holding on to your bullion, I congratulate you. Now, what's interesting is the performance of gold over the last 25 years. It has climbed by almost 600% versus the S&P, which is up by 560%, and that's including dividends. For over 2 decades, US markets had total global dominance, but gold has caught up, and the new trajectory to the moon came immediately after the 2020 pandemic plus the Ukraine war. And that's what happens when you print money like no tomorrow and you confiscate Russian assets. Money is forced to flow into a neutral reserve asset, none other than gold. Now, I'm not a soothsayer. Gold might correct sharply tomorrow for all we know, but let's think a little long term here about why. Now, firstly, we have the $3.4 trillion tax bill. It will be funded by deficit spending, and as we said before, productivity gains are not guaranteed, but a bigger national debt is. So, what do you think Trump is so desperate to fire Powell and install a new Nazgul as the head of the Federal Reserve? He wants rates to calm down to prevent a US debt implosion. Now, just look at the US 30-year yield. Long term bonds are back near 5%. Demand just isn't there. So, Trump is forced into a lose lose situation, which is a win win situation for gold. And I want us to absorb this coming dilemma. You quickly realize the US debt situation is going to be a big tailwind for gold. Now, if Trump manages to slash the Fed funds down to 1%, this will destroy the value of the dollar. Inflation would also spike, especially during a tariff war. Good news for gold. But if Trump doesn't manage to slash rates down, Besson will still have no choice but to issue short term bonds at over 4%. Now, sure, it won't take down the US economy just yet, but the interest payments itself will continue to climb. At either situation, the outlook for gold is looking good in the next 5 to 10 years, especially when we look at the situation with the dollar. Now, the USD has lost more than 8% this year, and the longer this tariff war continues, the decline is only going to get worse. Remember the fundamentals, gold is priced in dollars. As the dollar continues to collapse, it provides a technical tailwind for prices, and this is regardless of de-dollarization. We aren't even considering China or Russia buying gold. Now, it's important we zoom out and look at the bigger picture. The biggest drivers of gold demand aren't done buying just yet, and those are central banks. Everyone has seen what has happened over the last 4 years, and I would argue the trade war could spill over into an asset war. American assets held by foreigners could be taxed or immobilized in a worst case scenario. And that's why central banks are still buying gold. In May, the net purchase hit around 30 tons, and we're just waiting for the next shoe to drop. A trade war is destabilizing, and normally that would mean global investors running to dollar bonds. However, we are seeing the exact opposite, which means a structural shift has begun. So, yes, gold has risen by 25% this year. That's 4 times greater than the S&P, and anything could happen. A mini crash could occur tomorrow. But if you project the timeline out to 5 to 10 years or even 20 years, it's pretty solid for gold. And unless the US suddenly U-turns the tariff war or suddenly colonizes global supply chains, the economy is fried and the dollar is still toasted. But let me know what you think. Did China checkmate US industries? And will gold continue outperforming US assets? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.